Hi there, traders. This is Brad Gill with the FX Market Insight for the 23rd of October. All right, as we come out of Monday's trading, it's always good to really start to look closely on Tuesday. You get a reconnection of the market from Friday to Monday. And if there are any sort of outstanding or weekend issues with geopolitics or the like, they seem to be factored in by the close of trade on Monday in the US. Now, let's look at where the major currencies are. Aussie's lower from yesterday, Kiwi, Euro, and sterling. Now, on face value, you'd think that the US dollar's had a pretty good run, and there must be something good on the US. I've had a look through the news. There's no major US events out until later in the week. Now, the Aussie and Kiwi, first thing I would think of is, okay, they're lower. The yuan must be lower. Like dollar yuan must be higher. Well, it's actually fallen recently. So the correlation between the Aussie and the Kiwi, just be careful. That correlation with the yuan has broken down very much so. The Aussie's now correlating around 40% and the Kiwi around 50%. So don't sort of think if the yuan moves, Aussie and Kiwi are going to move the same way. That correlation is broken. And if anything, the correlation with Aussie, Kiwi, Euro and sterling, they are all quoted the same way against the US dollar. They have kicked in, and that's what's happening, and that's what's driving the market. So now you need to isolate, okay, so is it the Euro or sterling that's driving it? Well, there's two geopolitical events, two separate ones. The Euro still caught up with the Italians have need to go back to the drawing board. They've issued their budget for next year, and it's a huge amount of spending. They don't have any cash. It's outside the EU rules. So, and Moody's downgraded their credit rating, Italian credit rating. The outlook's still stable, but what that's done is it's just put further downside pressure on the euro whilst that issue remains. Now, I expect that to probably be resolved. You probably see euro back at 115.40 shortly. On sterling, it's a continuation of Brexit. Now, we had some really good news sort of Friday saying Theresa May and even the EU dudes saying that, the Brexit deal was 90% done. May went a bit further and said it was 95% done. Now, the turnaround is the deal isn't done, and there's a whole bunch of issues. Now, that's put downside pressure on sterling once again. But at the same time, I say this sort of seems like every other day. I would expect potentially sterling be back up at 131.10 once we do get an article out saying, it's all good again. Okay, so just be careful. Sterling is exceptionally random, and it's all based off news articles and comments from politicians and the UK PM. Dollar CAD, it's had its run after the week CPI retail sales data on Friday. It's now found fair value and trading sideways. I expect that to do that until Wednesday's Bank of Canada meeting. Dollar yen, well, it's sort of trading sideways with this slight upward bias. It's not really racing away, and the market doesn't really want to play with dollar yen at the moment. Now, just coming across to having a look at what the impact has been on Monday's trading. The US dollar index, still big scheme of things, trading sideways, but has had a nice little day, and that's just on the back of the euro and sterling weakening. Okay, no dollar strength, euro and sterling weakness drive that index higher. Both those components add up to about 70% of that basket, so it's no surprise. Now, dollar yuan, this is the odd one out, right? So the weird thing is Chinese equities, the Shenzhen index and the Shanghai index, these things are up 4% or over 4% equity markets yesterday. Now, the dollar yuan, was weakening sort of through the Asian day, and then it's strengthened the last 4 hours. As I said, with that yuan strength, you'd expect Aussie and Kiwi to be higher, but they aren't. Okay, when you really break it down, and I've got this correlation index here for the yuan. You can see here, this is just the yuan itself, not dollar yuan. The Aussie and Kiwi, the Aussie's down to 40% correlation now in the last month, and Kiwi's at 50%. The gold still up there around 76%. So just be aware, if you're trading the Aussie and Kiwi off the back of the yuan, okay, you could come unstuck because this thing is not moving as much as it was. Now, go back a month or so ago, these things were up around 80% correlation. That correlation's broken down. So just be aware, do not jump straight into the Aussie and Kiwi on the back of the yuan unless it's something very dramatic. Equity markets, just having a bit of a roundup. We've got, down 0.5%. I mean, the main ones to be looking at are the Chinese equities. They seem to be on a path, rallying all by themselves. I can't see that lasting. If we have a look at the general news that's going around, okay, you're really looking to sort of isolate what the raw nerve is in the market. At the moment, we've still got Trump. He's got his hands full with Saudi Arabia. And Saudis are trying to backtrack and trying to work out some sort of way to get out of this mess. Just goes to show you knock off a respected journo, Khashoggi, and everything goes tits up. And that's it. So the main catalyst here, sterling, we've got Brexit, the Italian budget issue still impacting euro. Bank of Canada on Wednesday, I think the CAD should be on hold. And that's it. You can't really isolate or focus on a fundamental component that is driving these currencies. And that's the major issue for the moment. So what you want to do is actually sort of really try and focus on, okay, where can we go with this? And what should we be focusing on right now? That's what the task is as a professional trader, is trying to work out where is the easy trade here, or is there? Now, first and foremost, I like to sort of look at the overall market and see where the currencies are moving. Now, as I just went through, geopolitics are driving euro, sterling. So to me, it's not bad trading conditions. The currencies aren't gapping or doing something weird, but direction is random. And that's why I've got a little bit of cloud there over the general trading conditions. Let me just go into the upcoming events. Well, there's nothing today. We're really waiting for Wednesday, where we start to get some German and Eurozone manufacturing numbers. And then, of course, the main game will be the Bank of Canada interest rate decision. That's the major focus. Obviously, the ECB following that the following day. So there's not a lot to do just at the moment. If anything, remain patient. These are currency pairs, and this is the daily analysis snapshot. Okay, the combination of fundamentals and technicals. Once again, all I'm doing is, if you clicked into these major pairs or these currencies, you'll find that all I'm doing is adjusting the overall hourly charts. There's been no change in the overall trend of any of these pairs. The US dollar is getting close to a break to the top side. Kiwi had a little flutter yesterday, a false break to the top. It is now sort of back in the range. Dollar CAD trading sideways, dollar yen sideways, Aussie sort of just drifting. The big issue at the moment is the geopolitical events surrounding the Eurozone and sterling. Of course, the Saudi issue is impacting the US, but that's it. And until we get some resolution on these three major pairs, euro, sterling, and the US dollar, these other pairs are just going to toe the line. So at this stage, what you've got to do is, this is where you've got to be vigilant. Okay, wait for potential short-term direction from the upcoming data. There's no data today, so just be aware. Direction could come from anywhere. And when you're trading that, it's a very random situation. So there's not much for me to do today except recognize that trading conditions are not really that great. Direction's not going to be that cool at the moment. So I've just got to sit back, remain patient, and wait for the good opportunities to come. Now, all you got to do is wait a day. So don't get yourself all bent out of shape thinking, I need to trade. All you're doing is adjusting your trend lines to where the current levels are. And as you can see, there's no major follow through on any of these pairs, except for the ones that do have the geopolitics, and they are sort of thrashing about in very big ranges at the moment. All right, guys, that's it from me. Just keep it steady. We'll be back tomorrow with more stuff on the FX Market Insight. If you have any questions, I'll see you in the trade zone. All the very best. Cheerio.